Hello, everybody, and happy 4th of July. What a day it is. And today, CJ and I, as part of our first endeavor as members of Trade the Chain, is going to be talking about the dollar. And what a fitting day to do it because it is the 4th of July. We're feeling patriotic. And the dollar is a very important part of, our equity analysis, our Bitcoin analysis, and just our everyday analysis. So we want to talk about why it's important, why you should be looking at it, what we look at, and a whole lot more. With that, CJ, how you doing, my friend?
Doing well, Monty. I mean, first of all, I guess I should start by saying the dollar status as the world's primary reserve currency gives its very much significant influence over U.S. equity markets, especially when you have it with high interest rates becoming an attractive carry trade for foreign investors as well. But there's lots of stuff we can go into and talk about.
Oh, yeah. But if you think about it just from an intuitive level, right? An intuitive perspective, when the cost of the dollar goes up, when the dollar strengthens, it raises the costs of goods and services for both American and foreign buyers. Essentially, what the DXY is a basket of assets. 57% of it is the euro, also Swiss franc, Canadian dollar, Japanese yen. What am I missing, CJ? But
That's it.
yep, that's it. And not only that, that in itself is important, but the reason why we're talking about it today is because these dynamics are so important in how they impact investor sentiment and market price action. And specifically, we see this relationship with Bitcoin. So you can use the DXY as a gauge for Bitcoin's price. And CJ, would you like to talk a little bit more about how the DXY kind of relates to Bitcoin and how we've used it in the past as a tool?
Yeah, so I'm always flexible to new relationships and correlations that start to form. But historically, what we've seen is that when Bitcoin bottomed in 2018 during the previous cycle, that was when the DXY topped. And so those bottoms and macro tops have kind of corresponded with an inverse correlation. And then, when we had the dollar really appreciate on the back of rising interest rates earlier in the year, that was kind of the macro top for Bitcoin as well. So typically we look for an inverse relationship there. And if the dollar is to continue this descending triangle, as well as countries kind of moving away from the use of the dollar and transacting in the dollar, then we could have, that ultimate parabola that we saw in 2020 kind of retrace, which would be interesting because that would imply a lot of positive price action for risk assets like Bitcoin, if that relationship is to continue like it has historically. Now, I do want to mention there are certain times when, let's say, positioning within currencies or specifically the DXY gets very crowded. We did see earlier in the month equities and the dollar actually rally in tandem because we had a massive short squeeze in the dollar. So there are, instances where market extremes can actually break down that inverse correlation. But, as of today, we're obviously seeing it come back. And in the long term, that's where the inverse correlation should be sustained. But that's how we've used it kind of historically. Monty, is there anything you'd like to add to that?
No, we say it all the time. The world is just one big pool of capital and it moves from one place to another, right? And I think the DXY is a great gauge of not only where the money's going, but also investors' sentiment, right? When we see the DXY rise, it typically means traders are risk off. Like you pointed out, not always, but when you see the DXY going up, it typically means traders are moving out of equities, out of Bitcoin, and thus we see weakness in those areas. So it is a very important tool for analyzing Bitcoin. That's why we look at it. And there are many elements of analysis that you can apply to the DXY that can help you get a better understanding of why Bitcoin's moving the way it is.
I feel like the Druckenmiller thesis of the dollar going down as kind of a response to all of the things that, you know, Janet Yellen and like Powell have done over the past couple of years. Like he was afraid to buy them on the way up. And that was the trade he said he missed, one of the largest of his career that he said he missed. So he doesn't want to miss it on the way down, shorting, you know, basically Powell and Janet Yellen throughout 2023 and 2024. So if that kind of continues, you'd have to somewhat assume if that inverse relationship continues, then you do see risk assets rally. And maybe we do go into some type of super cycle within crypto and equities. So it'll be interesting to see how that relationship plays out, because it's really weird. Like if you look at 2000 and the bubble in like 99 and 2000, the dollar was going up during that time because people from various other countries were buying the dollar in order to buy US equities. And in many cases, when a country—
Well, then it crashed to 67.
Oh yeah, yeah, no, I totally, yeah. And then they crashed in tandem. But I'm saying like that correlation, it's weird that we've seen an inverse correlation with the DXY, because when you look at a lot of other currencies, if you have a country who's doing well, like China, for instance, like their currency was doing well when their stock market was going up because people need to buy yuan in order to buy the underlying stocks in many cases. So
Sure.
Sometimes that relationship comes back, but as of late, what we've seen with the dollar, at least since massive MMT and QE, we've seen an inverted correlation. So I like to be open to like the flexibility of that relationship changing.
Yeah, CJ. So there's no doubt that the negative correlation between the dollar strength and Bitcoin's price action is something that exists currently right now, but that could be something that changes over time. That relationship is flexible, it's malleable, but for the time being, we are certainly seeing that inverse correlation, and as a result, we'll use it as part of our analysis. So the dollar really is kind of, for me at least, one of the first things I look at every morning when I wake up. And given that today is the 4th of July, we thought we'd bring you guys a special episode specifically on the dollar, its effect on the economy, its effect on Bitcoin, and essentially just how it shapes overall global markets, because it really does. So yeah, that's all I got. You can catch us live for our first Doge of the day on, I believe, Wednesday. Check out your emails. Alex is going to blast one out for you guys. But beyond that, have a happy 4th of July. Cannot wait to trade and share some insights with you guys in Trade the Chain. But CJ, I will leave you with the final word, my friend.
Yeah, appreciate it, Monty. Hope you guys have a wonderful 4th of July. Be safe and have a wonderful time. Enjoy some of those fireworks, a good old American tradition, baseball, all the good stuff. Maybe some funnel cake, right? So,
right. Just don't blow your fingers off, because you need those to trade. Well, maybe not. You don't need them, but they help. They help to trade.
Thanks for ending the show on a high note. So appreciate that.
Just be careful, everyone. Have a happy 4th.